Okay. Hello, this is James DiBiasio from DigFin, and welcome everyone to today's webcast on digitization and the cloud and automating corporate actions. I'm very pleased to be here. We have a great audience and we have a terrific lineup of speakers. So welcome everyone. It's 11 a.m. Hong Kong and Singapore, and I guess 1 p.m. in Australia. We're going to be hearing from some terrific speakers, but before that I'd like just to let the audience know that we're going to have some polls, and we really want to get some questions from you throughout the period. We've got up to an hour today, and we're doing this for people in the audience from around the region, and we'd really appreciate your questions. So if you are logged in, you will see at the bottom of your screen something that says Q&A, and that you can just put your questions in straight to the panelists. So I'll remind you a few times throughout the journey, but I want to make sure that you just are aware of that, and we would all really like to hear from you. So let me introduce the topic very briefly and the people that are going to be speaking, and I'll take you through how we're going to go about it today. So again, my name is James DiBiasio, and I run digfingroup.com, which is a news site covering fintech and digital finance. With me today, we've got Alan Jones from SmartStream. We have Satyan Patel, who is Senior Vice President, Global Client Development at Hong Kong Exchanges, who can talk about the issuer side. We have Dean Chisholm, who is the Chief Operating Officer for Asia Pacific at Invesco, who can talk about the buy-side issues around corporate actions. We've got Francis Brekevelt, Chief Operations Head for Asia Pacific at BNY Mellon, who will discuss what is happening on the custody banking side. David Fodor from AWS. He's in charge of business development for financial services in Australia and New Zealand. So we have this lineup of very experienced people who have been dealing with the issues around how to automate, how to digitize, how to streamline and make efficient very tricky things, including corporate actions. I think for this audience, I don't need to really go into the issues around corporate actions. Of course, that's what our panelists are for, other than just to say that this is not a new problem or a new topic, but it's certainly one that gets more and more thorny with issues around how to scale it as volumes grow, as new markets are added, as new companies go public and are reporting issues that affect them as credits or equity investments. So what I'm going to do is we're going to set the stage in terms of explaining a little bit more detail and depth about the issues around corporate actions. Alan Jones is Head of Business Solutions for Asia Pacific at SmartStream. And I'm going to give the floor to Alan first. He's going to just take us through some of the, I guess, really kind of definitions. And then from there, we will hear from our other speakers. And then we're going to have some polling and some Q&A and some discussion. And we're going to try to get into some of these issues. And hopefully, at the end of it, have some idea about where we are, where we're headed, and what firms can do to make their lives better. So with that, Alan, why don't you take it from here, please?
Well, thank you, sir. Hello, everybody. My name is Alan Jones, as James said. I've been with SmartStream a number of years now, but I'm working in the corporate actions arena for 20-plus years, so quite a seasoned professional in this particular domain. With regards to my time at SmartStream, I've had a number of interesting positions working with different clients in different market sectors across different geographical locations. It's really given me an insight into the different challenges that different markets have. Okay, with regards to looking at some of the industry challenges that we face, I did some analysis, and there's lots of different reports out there on the internet, and all of them present exactly the same kind of results. If you look at where financial institutions see the highest risk in their operations, in their middle and back office, they all consistently report that corporate actions as being the highest risk operation process that they have to manage today. And only by adding automation control around that operational process can they really look to mitigate the risk and reduce the operational costs of managing that corporate action process. Lots of organizations are already benefiting from automation in this area and achieving those reductions in operation costs and the risk associated to corporate actions. And the real benefits of building a control environment or an automation process around your corporate actions really delivers not only those operational benefits, but also looks to enhance the client servicing and looks to enhance the information you're pushing to your client base, whether they be internal or external clients. So the slide here, I think, very clearly identifies that the highest risk associated to that middle and back office process is consistently voted for by professionals as being corporate actions. There's another slide that presents a similar kind of view on the levels of automation within the corporate action process. If you look here across the different areas that were polled, you can see that corporate actions again has the lowest level of automation as of today and the highest proportion of manual processing associated to it. What I also found interesting about this report was performance measurements and client reporting scored very, very high on the levels of automation that are currently achieved. But you can relay that to the corporate action process being very low, if not zero, associated to the performance measurements and client reporting that's associated to corporate action processing. If we were to add automation and be able to deliver some kind of performance measurement capability into the corporate action process, that number would massively grow. Plus, you'd deliver the benefits of building analytical or MIS reports around your corporate action process, enabling you to maybe measure and manage the service level agreements you have with your service providers to make sure you're getting the service levels that you're actually paying for. And of course, client reporting. I think all companies are looking to really enhance the service levels they provide to their clients to make sure they are not only winning new business, but also retaining the client base that they have today.
Okay,
moving
great.
On, sorry, just to round up, with regards to the approach that you need to take to automating the corporate action lifecycle, there's three main pillars that any corporate action solution will be built upon. Yes, automation. We look to automate everything we possibly can, transition the corporate action lifecycle or the process from a paper-based, manually intensive process into an exception management process. So you're only dealing with the events that present exceptions, and then everything else achieve STP, full automation as far as possible, breaking down the more complex events, the risk-intensive or complex voluntary events into a task-orientated process where you're pushing tasks at the business users via a user diary, for example. So you're looking to automate every step of the life cycle as far as possible. Within that automation, you absolutely need to build in the control points, so you can build in control checkpoints into any event dependent on the event type, the market, the size of the position that's held against, for example. So lots of different intricacies that need to be built into the corporate action event lifecycle depending on the type of the event, the specifics of the asset class it's announced against, the market that the event is playing out in, for example, which all lead into the requirement for any solution to have true flexibility, to have very, very soft, granular level business rules pre-configured within a solution so that you're not spending months and months on configuring the solution, but taking industry best practice configuration into your production environment and just tweaking business rules to meet your specifics of your client base, your investment portfolio, for example. Okay, So just looking at how corporate actions automation is achieved, I think the main pillars are automation achieved by the delivery of control with the flexibility to tweak those business rules and those operational workflows. The corporate actions ecosystem within an automated environment, as you can see, we need to deal with multiple market-level integration points from data vendors, custodians, prime brokers, in multiple different formats, be they proprietary formats or even ISO 15 or 20022 formats. Putting that information, normalizing that information, presenting it to the business user, passing it through the business rules and workflows to lock in eligible positions and work out who is actually eligible to benefit from the events. Generating communications, managing the election lifecycle right through to generating enticements and the integration with your internal systems, be they book of record systems, core banking systems, trading platforms, whatever they may be. Okay. Once you have that ecosystem, then you can start building your management reporting, KPI governance, managing the SLAs, doing that analytical reporting that really benefits the measurement of the corporate action process to enhance and continually improve the service you're offering to your clients and the operational procedures you're managing internally, and all the additional benefits in terms of providing self-service collection capabilities to your internal and external clients, so on and so forth. Okay, so just in a very quick nutshell, that was kind of the ecosystem of a corporate action automation. So I'll now pass you back to James, and thank you very much.
Yeah, thanks for that. So what we're dealing with is a lot of long-standing, very complex procedures that involve a lot of different players. And I think because we're dealing with such a variety of the corporate actions themselves are all very can be very differentiated, and then you have to have such cooperation among people around the world. So just scaling this has been an issue, and it's made it sort of non-economical for a lot of people to automate vast parts of this system. I'd like to talk to David Fodor from AWS. David, you deal with financial service institutions, and of course you're talking about cloud and you're talking about scalability. What do you see going on, and what parts of this story are becoming a lot easier to address, and what parts are going to be perhaps still a challenge?
Yeah, thanks, Jane. Excuse me. It's been interesting to see over the past few years as I've worked across the financial services industry, specifically in the Australian and New Zealand market, that conversations that pertain to public cloud, particularly hyperscale cloud providers such as AWS, have really moved away from why. You only have to wind back the clock as little as 3 years, and financial services institutions were questioning why they would bother to move to cloud. It's been a rapid evolution away from the why questions to really focus now on the hows. How do I get started? How do I get quick value from moving to public cloud? How do I accelerate my journey? And importantly, within financial services, being a heavily regulated industry, how do I deal with the regulators as I go along my cloud journey? What we're now seeing in the market, James, is a real fork in the road between those customers who've experimented with cloud-based applications and infrastructure and services and decided either we've had a go, we've decided it's too hard, or the regulator doesn't like it, or we just can't build the skill set that we need, versus those that have really invested, had success from an experimentation cycle, have been able to prove cost value and innovation value to their organizations, been really good at developing internal competency to manage and operate in cloud, and now are really pushing hard down a fast and quite aggressive mass migration and total architecture reinvention phase, all based on a cloud infrastructure construct. We used to, in my market of operation, look to quite evolved markets, particularly the US market, for the role models of what good look like for cloud adoption. But in the last 12 to 18 months in the Australian market in particular, we've seen some standout success customers and very public stories, particularly around the likes of the National Australia Banks of the world, who've been fantastic at investing heavily across their organisation to develop competency that they need to build in cloud. Macquarie Bank has been another organisation who has been on a cloud adoption journey for a long time and has been the role model for how to build a secure and scalable cloud platform to service all parts of their organisation. And, an adjacent industry in the health insurance industry here locally, we've seen NIB Insurance laying a lot of the path for others to follow, doing a lot of heavy lifting with the regulator on how to get really material and mission critical workloads approved to support their business. In terms of adoption trends, generally there's a standard pathway that our customers work through, from low materiality workloads through to those that are really core to their business and mission critical. A lot of organisations start their journey with digital asset reinvention and innovation. So their customer-facing applications such as their mobile applications, their websites, etc. Once they've developed some competency in managing in cloud and demonstrated to their regulator that they are safe and secure in cloud, we start to see organisations migrate their organisational and customer and transaction data to a cloud-based modern data architecture. And that leads the way for a number of paths to follow, whether it's just retiring a lot of their legacy technical debt in the organisation, or whether they want to go onto a hard innovation journey, rebuild their development pipelines, and really push into the adoption of artificial intelligence and machine learning. I think once we get critical mass of data in cloud, we see organisations using that as a springboard to accelerate their adoption of artificial intelligence and machine learning. There are a number of drivers behind that. Yeah. It really depends on your individual circumstances, but certainly when it comes to a platform like SmartStream, we generally see customers leaning in during either a greenfield installation to go to a SaaS model, or they might be brownfield, going through an asset lifecycle upgrade process and using that as their trigger to move to a cloud construct.
Right. Okay. That's very interesting. Yeah. It does make sense. I mean, you're talking about companies at very different stages of development, right? I mean, a young greenfield, or like a virtual bank in Hong Kong or something, where a challenger bank is going to have a very different set of opportunities and needs than like a BNY Mellon, which has been around for centuries.
Yep.
I want to let me bring in now some of the market practitioners. But before I do, we had one question from the audience who asked if the slides will be available for the attendees after the call. And yes, you can get the slides. I'm sure we'll send an email out to everyone with that. So thank you for the question. And for anyone who's dialed in since we began, welcome to the webcast. And on your screen, you should have a tab at the bottom that says Q&A or questions. We would love to hear questions from you. So we've got both vendors, banks, investors, and now I'm going to ask Satyen Patel from Hong Kong Exchanges if you could tell us a little bit about some of the challenges from the issuer side. You guys are really at the heart of where the information comes from, or at least your companies that are listed on your exchange are providing that information, and then you are a key disseminator or a point of information for everyone else in the marketplace. But this has been a challenge. You have a variety of issuer types, a variety of bank and broker types, and a variety of investors, local and institutional from around the world. So, Satyen, tell us a little bit about what you see going on. What are some of the digital priorities, and how some of these issues around corporate actions are going to fit in?
Hi, thanks for that. Yes, I think I might just start with a helicopter view, since you touched on the digital priorities, and a lot of our 3-year strategic plan that we released to the market early in the year focuses on a component which we call technology empowered. And a key part of that is a lot of the work that we're doing in the post-trade space around our core infrastructure, capital efficiency, and resilience, in terms of how we face the market. But one key pillar of that is access. Client access models that basically enable more flexible and more integrated access with back office services and I guess straight through processing, or STP, connectivity, which is, where a lot of work that we're doing, both, trying to bridge that chain from issuers to investors when it comes to corporate actions announcements, as well as in the post-trade space, dealing with a particular blockchain solution to an issue we're facing with settlement for trading into China through the Stock Connect program. I think there's a lot of work going on STP connectivity across the exchange, and to your point about digitizing, part of the workflow, what we call Client Connect as part of our next gen program, streamlining something like over 60 paper-based forms into a number of e-services, where sort of physical signatures and company chops potentially disappear. There's more of an audit trail that's available for service requests and so on. As I said, digitizing many paper-based services and STP of existing processes. And I think the way that we think about corporate actions, is exactly that. It should be a more of a straight-through process for our issuers and our investors. The challenges that we understand the market's facing with this at the moment are announcements that are made in maybe unstructured or non-standardized formats. There's a lot of manual work that we still do in extracting corporate action information, manually re-entering that and disseminating that to the market. So there's some risk around data mismatches and misinterpretation. There's a manual process that by definition causes some time lags. And all of this is happening, in an environment where, we have over 2,000 issuers. Volumes are growing, the number of corporate action events are growing. And so what we need is an STP solution that we're looking at as we go into next year, where essentially data can be sent directly from the issuer without, material, if any, human intervention in a standardized global format that's delivered to investors in a timely way. So essentially from the golden source through to the market over a number of different corporate actions through the, through some sort of message conversion service into a more standardized format. I think you mentioned ISO 20022, potentially ISO 15022, so that I guess all stakeholders, issuers, investors, depository, and intermediaries like the custody banks could potentially benefit from that. So there's very much a work stream going on around that.
Yeah. So hopefully some good news in the near future that you'll be able to talk to the market about more specifically.
Yeah, correct. Yeah. So there's a lot of work going on there, and also in the China Connect blockchain post trade space as well that we've already talked to the market a lot about, and we're continuing to work on a solution there. So two key things in the post trade space.
Great. I'm going to turn now to Dean Chisholm, who's the Chief Operating Officer for Asia at Invesco, a very large buy-side firm. Dean, you've heard vendors talk about, the sweet spot of STP that they're trying to enable. You've heard from AWS talking about the way that entire architectures are being rethought. You've heard some positive messaging out of the exchange itself here in Hong Kong. And you use a lot of these services. So tell us a little bit about how have these pain points evolved? Where are we? And from an investor buy-side perspective, what still hurts? What would you like to see happen?
Yeah, thanks, Jamie. A few points to make at the start, I think, worthwhile. I think, first of all, the corporate actions area specifically has been what I call the poor cousin or the poor relative to trade processing. If you look back over the last decade, it's always been easier. It started with bigger teams in trade processing, so a bigger problem to resolve. And it's always been that little bit easier to eliminate manual work in trade processing. Trade processing's always been a little bit more standardized than corporate actions. And as people have already said, corporate actions tend to come in every shape and size. So using the old 80-20 rule, a lot of asset managers are focused on the trade processing and later come at different speeds to corporate actions. Now, depending on the size of the organisation, the complexity of the organisation, people typically have taken different approaches. If you've only got one third-party administrator or one custodian, it's relatively easy. You basically just use their technology and you just have to rely upon them for everything.
Right.
When you're a larger fund manager, it starts to become a little bit more difficult. Because when you're trying to recognise and dealing with a large number of counterparties, you need to get critical mass of the number of counterparties doing things in a standardised manner. And unfortunately, corporate actions is just probably the most unstandardised part of the business. It's not just unstandardised from like electronic messaging or data exchange. They're actually unstandardised from the actual content of the corporate action. Different custodians will have different notification dates, for example. So these systems need quite a lot of flexibility in terms of how they process. And for ourselves, it'll now be 10 years ago, we just used some simple Microsoft technology to get a reasonable bit of internal workflow automated and interact with IBO engines and the fund managers in the front for making decisions on discretionaries. So you're able to do a lot there. But getting the next leap 10 years ago of talking electronically with outside parties was both incoming information and outgoing messages was relatively difficult to get high levels of automation. At that time too, I'll be honest, which is difficult having a couple of vendors on the line, it was relatively expensive. You could never justify the cost of a project. You would do the discovery, you looked at the discovery, and there was always something else internally which had a better payback. So we're moving probably more towards a turning point in terms of technology. I would agree in terms of the SaaS generally, of outsourcing the cloud, outsourcing the technology into the cloud. Certainly, whether you're in this period of a bit of a turning point where cloud technology for financial services is gaining some internal credibility. If you look back 3 or 4 years ago and you talk to compliance that you wanted to go into the cloud, you'd have a long explanation required, and the security people would be asking 20, 30 questions of you before you started. So the natural tendency was not to do it because it was just in the too difficult bucket. I think today there's gaining acceptance. There's still a lot of work. We've done some cloud stuff. As a US-based organization, you just stick it in a US cloud and you get over a lot of the data security questions very quickly. But you're now finding cloud is pretty well the norm for applications. And you're just really waiting for the trigger point internally for making decisions. For example, we, a different area of the business, we use SmartStream's reconciliation product. It was coming to an upgrade, and we sat and we looked at, do we keep it internal or do we push it out to the cloud and have it managed on a SaaS basis? And that was the natural choice for us when you start to look at the economics of the cloud. The economics are normally much better. But those are sort of things to think about, Jamie, when you're coming to try a decision of when to move the technology suite.
Right. Okay. I'd like to also ask, maybe Dean, you can talk about this, and then Francis, I want to get you involved in the conversation. You've talked about sort of the architecture around cloud, but with all this unstructured data, to what extent are we at a place where machine learning or other tools in the artificial intelligence world can start to put a dent in some of these problems? So maybe, Dean, you tackle that, and then we'll get Francis in the conversation here.
I think we're still at the early stages of this. I totally agree that machine learning, artificial intelligence, the two combined together are going to make fundamental sense going forward. And we've done some experiments with it, and they've got good results. The challenge is you've got to have good quality data to start. You can't do machine learning with bad quality data. So you've got to be able to assemble your data and ensure that data is good quality. I don't like the term big data. It sounds awfully trendy. It's essentially just a lot of data, and it's the challenges of getting clean, accessible, big volumes of data. Now, obviously, the cloud computing is a prerequisite to getting that much data assembled and ready and available. You've got to have a lot of data, or you're going to get false results. I've seen quite a bit recently where people spend more time on ensuring false results don't come out than actually getting clean results. But undoubtedly, I think it's the way forward, but it's going to just take a little bit of time to get it through. Also, one last comment, for fund managers, it's a bit more of a challenge because typically fund managers have outsourced, and we're not holding huge amounts of data, and we tend to be slightly lower volumes. I think you're going to see the lead in this area from the large vendors, people like Francis from Bank of New York Mellon, who've got a lot more scale than one individual fund manager.
Well, that's a great way to hand it off to Francis. Thanks for those comments, Dean. Francis from Bank of New York Mellon, he is based in Singapore. He is Chief Operations for APAC. Thanks for being patient. You've heard all the comments. Tell us a little bit from a custodian's point of view, how are things evolving?
Right. Thanks, James. And look, I agree with all of the comments that were made before. And look, I think there's very little people that would disagree with me. I think if I say that corporate actions is one of the least, if not the least efficient part of the post-trade life cycle. It is manual, it is error-prone, and the risk and cost profiles probably are not where we'd like them to be. And as you said in the beginning, the volumes are going up. More markets, or investors are looking at more markets, including more asset classes in their portfolios. The complexity of the instruments through derivatives is obviously increasing. So there's this whole notion of scalability that obviously comes into that picture, which is important, especially when you look at these corporate actions now. Having said that, though, I think for the past decades, and some of the other speakers were alluding to that as well, we've made some good progress. But I would term it as relatively evolutionary. Yes, we had standards ISO 15022, 20022, and the take-up has been gradual and good. We made workflow changes in our organization, and I think the result of that is that in very discrete pockets of the corporate action life cycle, we've actually made some good automation progress, whether it's notifications, instructions, payments, but it's very discrete. The good thing, though, is that allowed us to automate to a large extent what I would call, and I'm using air quotes as I'm saying it, the easier corporate actions, and that's primarily the mandatory events. But I think where we are now is that we recognize that there's a lot of work to be done. And people were talking about the voluntary corporate actions. Obviously, that's still high risk with a lot of exposure, and we still need to do a lot of work in that. And the other thing I would say is that we need to connect the end to end because even if we do things within our organization, we need to link it to the valuation systems. We need to get it into Dean's trading systems, etc. So that connectivity across the board definitely is not as automated as we need it to be. So from a service provider perspective, what does that mean? And I think Lisa was asking the question on why is it easy to achieve automation. We've embarked, at BNY Mellon, we've embarked on what we call a corporate action modernization program, and the early signs have actually been quite promising. And I'm quite excited about it because I mean, just as Dean was saying, I think we're kind of at crossroads where we're going to move from that evolutionary type process into more transformation. And I think the bulk of that is because of technology. Because technology is a great enabler, and I'll talk a bit about your question, Dame, on cloud and artificial intelligence in a minute. But if we look at technology, I mean, there's a couple of things that does for us as service providers. Yes, we continue to focus on inefficiencies in the processes Dean was referring to before. So we're looking at robotics, the RPA. We're looking at optical character recognition, OCRs, NLPs. We're also looking at how can we improve the connectivity between the various parties, whether it's through APIs, so the whole digital way of interacting and speeding up that whole process. Because one of the things that we need to remember, though, is corporate actions will remain complicated. I mean, Dean spoke about the bespoke nature of these corporate action events. There's a lot of data involved, as Dean was saying, and we don't necessarily always have a golden source, which obviously always causes a big problem. Sachin was talking about multiple parties that are involved, which are traditionally not really linkable. Issuers, data vendors, depositories, service providers, asset managers, traders. So it's difficult to kind of link those together. And the other thing that I would say, corporate action is not a single event. It's a number of events that need to happen over a period of time. So technology is going to be really important to link those up. So the traditional automation, things like RPAs, the APIs for digital connectivity, and then the two new technologies, I would say, the cloud technology, and I would even put DLT, the distributed ledger technology, in that space. Again, we're seeing more applications of that weaving into the success that we get in inherently difficult processes, and corporate actions really is one of those. And to go back to your earlier question, do we see machine learning and deep learning play a role in that? And the answer, I think, is yes. I mean, as David was saying, it's no longer a question of going to a prospect or a client and say, hey, why wouldn't you look at the cloud? So I think the advantages of the cloud are well established, whether it's around flexibility, agility, speed, and all these. Even the risk question, I think, is changing, both from a client and regulator perspective, so they create sandboxes. But I think there's a growing recognition that cloud providers have people that do this as a full-time job and not as a hobby. So those discussions are changing. But where I do see, or where we do see a change in the approach of the people we talk to, and quite frankly, personally, I would have expected it to be a little bit further along, but the institutions that are really serious about taking up these cloud services is probably the institutions that look at the cloud not only as a cost play, so they're looking at how can I leverage the cloud to differentiate my products, how can I leverage the cloud to improve my client experience. Obviously, cost is an important element, but it's a combination of the others. And then going back to what Dean was saying, right? We talk about big data. We need a lot of storage, we need a lot of processing power. That's where the cloud comes in. And if then you overlay that with these AI, machine learning, deep learning type techniques to transform that big data into smart data, that is where I believe the cloud services will provide a big advantage. And that's kind of where the discussions are going with our clients and prospects for the moment.
Right. Okay, that's great. So, I mean, listening to all of you, it sounds like whether you're from the vendor side, the exchange, or one of the market participants, we've made a lot of progress across a number of different processes, automations, and tools, and this stuff is just beginning to cohere, and that we're going to be on an interesting journey that will be probably very beneficial and reduce risk and provide new business opportunities. We've got a little bit of time. I'd like to bring in the audience now. So again, obviously, if you'd like to ask a question on any of these things to any of our panelists, go down to your tab that says Q&A or questions, and then type that in. But also, I'm going to put up on the screen a slide here. This is a poll. This is an interactive thing. So I think it should be self-explanatory on your screens how to participate. But we just like to ask first, very generically, what is your firm's cloud adoption strategy? And we'll wait a minute or two for you to click on it. But we've got yes, we're cloud first, or no, we have no strategy. We only use internal cloud, no vendors, or we are hybrid, or D, we're still figuring it out. So we'd love to hear from you just to get kind of a sense of where the universe is right now. While we're waiting for that, I'd like to ask, we haven't talked about the role of, I guess, sort of like the public versus the private side to this. Is there a regulatory role when it comes to dealing with issues around corporate actions? Should there be one? How does the regulator get involved in this, or is this left really just to the market to figure it out for itself? Francis, maybe you could give us a sense of that.
Yeah, it's a great question, Jamie. And I think the answer there is yes, because there's a lot of harmonization that needs to happen. The regulatory environment, and especially the taxation environment, is inherently difficult. If you look at a cross-border type function like corporate actions. In terms of the cloud, the regulators definitely have a role to play. But as I said in my opening comments, we do see a change in the approach to that as well. But even in the institutions, right? So it's a question of, do you use public cloud? Do you use private cloud? Do you use a hybrid model? It really depends on the risk tolerance of the institutions. We see a combination of quite a number of things. Some institutions elect to keep their confidential information on their own legacy systems and then put other things in the cloud. But I do see the regulators becoming more comfortable with cloud services. But the more broader context of corporate actions, regulators definitely, I think, have a role to play because, as I said, there is a lot of harmonization involved. And if I could just draw a parallel real quickly, we saw something similar happening in the T2S space in Europe. So regulators were absolutely on board. It was driven by some of the European regulatory bodies, and it still took 10 years to get to a very harmonized system. So if it's led to the market, and to Dean's early point as well, the ROI may not necessarily always make sense. So I do think that the regulators and the authorities will play a big role in providing that impetus to continue to look at streamlining this further.
Thanks. So we've got some results in. Thank you, audience, for clicking on the poll. David Fodor from AWS, why don't you just give us your quick 2 cents on what you see here? So the biggest response is the bottom one, 50%. We're still just trying to figure it out, basically. We have a few using hybrid or on-prem. Nobody has said that they're only doing it by themselves. But there's a handful who don't have a cloud strategy at all, and then there's a few that are very aggressively using cloud. So does that twig with what your experience is with the marketplace?
Yes, Jamie. I'd say that's a fairly representative result from that sort of a question. If you were to broadcast that more generally across the industry and across the region, I think that there are obviously, it's a spectrum and players are at various stages along that spectrum. But, in my experience, there are very few organizations that aren't considering some form of cloud strategy, if not a cloud-first strategy where possible. What we're seeing generally, and it's somewhat prompted by regulatory authorities in different jurisdictions, is the use of multi-cloud strategies with the evolution of a primary-secondary type approach that might either replace or supplement their existing public-private strategy. So, great to see that there's a lot of organisations on the call that are in the process of developing a strategy and adopting cloud. We certainly do our best to inform both our customers and the regulators on the virtues, and I think to the point that Francis made before, there's a good recognition in most markets now that the cloud is secure and provides highly resilient architectures for all types of applications across the ecosystem.
Great, thank you. So we've got another poll that I want to put out to the audience. This is very specific about corporate actions processing automation. We've been talking about this for the better almost an hour now, so it'd be great to get some feedback to understand kind of where the audience is. So if you look again on your screen, we've got no automation, partially automated, fully automated. So you can look at that. So no automation, it's just all by email, doing it on Excel. Partly, so it depends on the event type, but no real meaningful workflow solutions. Or you've got it fairly fully automated. You've got notifications and so on, communications. You've got analytics. You got the whole shebang. Presumably you're a SmartStream client at that point. So please let us know kind of where you are with your corporate actions automation. And while we're at that, Alan, maybe you can tell us what do you expect to, where do you think the marketplace is when it comes to this sort of question?
Yeah, hi, James. Thank you. It is absolutely a completely mixed bag. Well, we visit many different clients and work with different clients across the region, across the globe, actually. And I'm continually surprised by the many different states that different financial institutions find themselves in with regards to levels of automation. It's quite surprising sometimes. I'll speak to a client who believes they have full automation against their corporate action lifecycle, but that is just the entitlements being calculated within their core banking solution. They don't have any control or workflow against the event management, communication and elections, and the position management elements of the event lifecycle. So it's interesting that some people's interpretation of automation against corporate actions can differ greatly as well. I was meeting clients recently in Hong Kong and Australia who still work very much in those archaic ways on Excel, very reliant on internally developed macro processes, processing their corporate actions, generating communications via emails, manually processed, etc. So there's a whole spectrum of different levels of automation achieved internally, but lots of risk against those end-user computing processes that are developed within a corporate action organization, such as the Excel macro processes and the like. So
when you look at the results here, we've got a third of the audience has no automation whatsoever, which is a lot. Most people, actually 2/3, say partly automated. Nobody's claiming full automation. So I think that gives you a pretty good indicator that it's pretty skewed to one side here. So this is clearly still an area that needs a lot of work, and I hope people got some benefit from listening today. I'm going to ask one last poll question. This one's a little bit technical, but it's around the messaging. This goes into the standardization, and this is specifically around ISO 222 data standards. So a lot of people are still migrating off the older version from ISO 1522. Some are just using it maybe just for the payment side, and some are going full bore into 222 for most processes. So again, there's a little more into the weeds, but if you've got an answer to this, we'd love to hear from you. And Satya and I know that you've talked a little bit about you've talked a little bit about the messaging side. What do you expect to hear from this sort of question, and how important is it that these messaging standards be promoted? How universal do they need to be?
Well, I mean, I guess they would have to be fairly universal because at the end of the day, as the market operator in Hong Kong, we want to make it as easy for all participants. As I mentioned, all stakeholders, the issuers, right through to the investors, to be able to, pick up this data, and scrape the data in this sort of increasing world we live in of quant funds and other funds wanting to use the data as potentially end users, and from an issuer perspective, finding it a simple and easy way to communicate that data. That there has to be a standardized, message converting a framework, and that's where we think the ISO messaging framework, is quite compelling. We have
how far along are we with adoption? Because you represent on your exchange, you have a real variety of users, right? You've got brokers and service providers and investors that are both, local Hong Kong shops as well as the biggest global firms in the world. Are you finding discrepancies in that take up, or is it a fairly uniform process?
I mean, for us, we're still at a very early stage from a process perspective, as I was saying, on our sort of automating the workflow of corporate actions. I think it was mentioned earlier that some firms still use Excel and proprietary in-house developed macros to collate and transform that data, and we're still at a stage of automating that. So, literally at the beginning of an important journey, which, would go down this path of using these standardized messaging formats. But equally, there, to your point about multiple different people in multiple jurisdictions, clearing and settlement system, some people are plugged directly into that. So we have to accommodate a group of users that plug into our CCAS terminal directly as well, for legacy or historical reasons. So I think we need to provide a solution for everybody, and so we're trying to do that through standardized messaging formats, but also recognizing that some people are plugged in directly to our clearing and settlement system for legacy reasons. So we have to accommodate that group of users as well, if that makes sense.
Yeah. Okay. Well, it's an important point because obviously you have to sometimes it's this nitty-gritty stuff that enables firms to engage in the deeper technological transformations that we've been talking about today. So we're coming toward the end of our time. I'd like to thank all of our panelists for taking this hour out of their busy schedules, and thank our audience for tuning in. As I said, SmartStream will make this Alan slides available, and thank you so much for listening in. So let me just at this point leave it to say thank you to Alan Jones from SmartStream, Satyan Patel from Hong Kong Exchanges, Dean Chisholm from Invesco, Francis Breakevelt from BNY Mellon, and David Fodor from AWS. Good luck with everyone's journey. This is never going to be solved with one stroke, but it sounds like there's a lot of optimism and a lot of interesting things that are being made possible now as the technology just gets better and better and people get smarter about how to use it. So let me just say I'm James DiBiasio from DigFin. Thank you so much for joining us on today's webcast, and good luck with your journey.